Every auditor has a case that seems easy at first. The taxpayer who answers quickly, sends documents before you even ask, and insists they want to help you get this wrapped up. This was one of those cases. The taxpayer owned a small tax preparation business, just them and a part-time assistant. Their return looked ordinary, Schedule C, steady clientele, nothing excessive. The income line caught my eye only because it seemed modest for the number of clients listed. A simple audit, I thought. From the first phone call, they were disarmingly pleasant, friendly, cooperative. They called me Agent Twitchell, thanked me for my time, even joked about how nerve-wracking it is to talk to the IRS. I laughed politely, made my standard disclosures, and explained that we just needed to verify income and expenses. They said, "No problem, I've got everything you'll need." And they did, or so it seemed. Within 24 hours, I had an entire digital folder. Ledgers, receipts, internal reports, everything labeled neatly. For a tax preparer, it was textbook compliance. I remember thinking, if only every audit went like this. But numbers tell their own stories, and sometimes they start whispering before you realize what they're trying to say. As I began reviewing their records, one small inconsistency appeared. Nothing obvious, just a line item that didn't quite align with the income on the return. Then another, then several more. The smile in their tone started to sound different in my mind. Not friendly, calculated. I didn't know it yet, but this was the case that would teach me the difference between cooperation and concealment. In most audits, cooperation is a relief. It keeps the process moving, reduces tension, and usually leads to cleaner resolutions. But every once in a while, you meet a taxpayer who mistakes charm for strategy, who believes that friendliness can cover up something the numbers won't. This taxpayer was one of them. When I started comparing their internal ledgers to the return, the math wasn't lining up. The total receipts in their accounting file were about 40% higher than the income reported on Schedule C. That alone wasn't unusual. Sometimes bookkeeping systems mislabel deposits or double count transfers. It's the kind of discrepancy you can explain with a few clarifying documents. I sent a polite information request asking for bank statements and client logs to reconcile the income. They replied within hours, cheerful as ever. "Absolutely, I'll send those right over." The new documents arrived the next morning, beautifully formatted PDFs, color-coded summaries, even a legend explaining abbreviations. It looked professional, too professional. Most small operations don't create internal spreadsheets with corporate formatting. This was my first twinge of suspicion. Under IRS procedure, we always verify taxpayer-provided data against independent sources. I compared their client income report to bank deposits. The totals didn't match. Deposits were higher, the names of payers were different too. Several clients in the bank records never appeared in their report. I printed both lists side by side. That's when I noticed something I couldn't ignore. The spacing, font, and timestamp metadata in the PDF didn't match the accounting program they claimed to use. They'd built these records from scratch. I documented everything. Discrepancies, formatting irregularities, inconsistencies in transaction order, the kind of small details that mean everything in a fraud review. Then I called my group manager. We looped in the Fraud Enforcement Advisor, or FEA, to assess next steps. The fraud process isn't about accusation, it's about confirmation. We test whether the inconsistencies result from error or intent. The FEA asks for supporting documentation directly from the software vendor, a secure data extract showing genuine system logs. The vendor confirmed what I already suspected. The taxpayers' reports had been manually recreated using Excel, not exported from the original program. In other words, fabricated. When I called the taxpayer to discuss the issue, they were friendly as ever. I explained that the file formats didn't match what the vendor showed. They laughed lightly and said, "Oh, I just reorganized them so they look cleaner for you." That's when the tone shifted. Not mine, theirs. Beneath the politeness was defensiveness. They started talking faster, trying to fill the silence. You know how messy QuickBooks can be. I let the quiet hang for a moment. Auditors learn that silence can tell you more than the questions. Then I asked, "Can you provide the original backup file?" There was another pause, longer this time. "I don't have access to it right now," they said. And just like that, cooperation crossed the line into obstruction. Fraud isn't usually dramatic. It's subtle. Little edits, missing files, perfectly formatted lies. The irony, of course, was that this taxpayer owned a tax preparation business. They knew exactly what I would ask for, and they built their defense in advance. What they didn't expect was that the details would give them away. When people fabricate records, they forget that consistency is hard to fake. Genuine data has imperfections, duplicate entries, stray spaces, timestamps. Fakes are too clean, and that's what this file was. Perfect in all the wrong ways. The case file grew thicker by the hour, documentation logs, FEA notes, copies of every version of their records. The FEA confirmed sufficient badges of fraud, falsified documents, intentional understatement of income, and false statements during an audit. It was now officially classified as a civil fraud case. I drafted the fraud narrative, a summary of findings, evidence, and taxpayer behavior. Writing it felt clinical but heavy. Every word had to be exact. Fraud narratives don't leave room for interpretation. Once my manager signed off, we issued the report. The taxpayer was still trying to negotiate, offering to recalculate the totals and fix the misunderstanding. But the facts were clear. They'd crossed the line from mistake to manipulation. That day I learned something that doesn't show up in any manual. Most taxpayers fear the IRS because they think it's out to get them. The truth is, the system gives people every chance to tell the truth. The ones who don't usually reveal themselves, not through attitude, but through arithmetic. The case didn't end with relief or gratitude. It ended with referral and penalties, and a reminder that cooperation means nothing without honesty. When the fraud enforcement advisor confirmed intent, the mood around the case changed. It wasn't tense or dramatic. It was procedural, controlled. Fraud referrals follow a script. Every step is documented, every sentence measured. The goal isn't punishment, it's precision. The moment we attach the word fraud, every detail must stand on its own. I finished my narrative, attached exhibits, and sent the package up the chain. From there, it was reviewed by management, counsel, and the penalty coordinator. The evidence spoke clearly. The taxpayer had created records after the fact to disguise income omissions. Their friendliness hadn't just misled me, it had misled the system. A few weeks later, we held the closing conference. I invited the taxpayer to discuss the findings. They accepted immediately. Still upbeat, still polite. I think they believed they could talk their way through it. When the meeting began, I presented the evidence calmly. Mismatched deposit totals, recreated ledgers, vendor confirmation that the original data didn't match. I explained that the inconsistencies demonstrated intentional falsification, not error. For the first time, they went quiet. Then came the pushback. They said they'd misunderstood the request, that they were only reorganizing files. But intent hides in patterns, not explanations. We'd found deleted income entries, edited timestamps, and identical formatting across supposedly separate months. Those aren't misunderstandings. Those are decisions. I referred the case for civil fraud penalty consideration, a 75% addition to tax. The advisor agreed. It wasn't personal, it was mathematical. Fraud cases don't end with dramatic confrontations. They end with signatures, a form delivered, a status change to unagreed, a penalty applied. The taxpayer can appeal, but the facts rarely move. Numbers don't forget. After the file closed, I reviewed my notes. What stood out wasn't the deception itself, it was the ease of it. A few spreadsheets, a friendly tone, and for a moment, it almost worked. That's what unsettled me, because trust, in this job, isn't built on personality, it's built on proof. I thought about how many times people mistake charm for credibility. Inside the IRS, we're taught to verify, not assume. But outside, taxpayers think approach matters more than accuracy. It's a dangerous misconception. Civil fraud penalties aren't common. They require clear and convincing evidence of intent, not negligence, not sloppiness, but a deliberate attempt to deceive. When that threshold is met, the case becomes more than an audit. It becomes a lesson. This one taught me that cooperation means nothing without truth. A smile doesn't offset missing income. Politeness doesn't ease fabrication. The IRS doesn't judge attitude. It measures integrity in documentation. When I train bookkeepers now, I tell them this story. I remind them that transparency protects better than strategy ever will. If a number's wrong, fix it. If a record's missing, say so. The IRS can work with honesty. It can't work with fiction. For me, personally, this case was a turning point. It stripped away the idea that every audit could end cooperatively. Some don't, some shouldn't, and that's part of the job. Understanding when empathy helps and when it hinders accountability. As the system processed the civil fraud penalty, I moved on to another case, another taxpayer, another story, but this one stayed with me. A reminder that friendliness can be a mask, and that the real language of truth is consistency. If there's one takeaway for business owners or tax professionals listening, it's this: never fabricate records. Not to buy time, not to save face, not to make it match. Once you cross that line, you don't just risk money, you risk credibility. And once credibility is gone, everything else becomes evidence. Next time on Audit After Hours, the story shifts from deception to disarray. We'll look at what happens when bookkeeping simply breaks down. Missing receipts, vanished records, and the rescue plan that turned chaos into compliance. When that case ended, I didn't feel vindicated. I felt steady. Fraud investigations aren't victories. They're reminders of how easily trust can be misplaced and how often confidence hides contradiction. This taxpayer wasn't sloppy. They were deliberate. And that's what made it different from most. They smiled through every email, every phone call, every explanation, but underneath the charm was a decision. One small falsification at a time. The documents told the truth they tried to bury. And in the end, that truth mattered more than the tone ever could. I think that's the part people misunderstand most about audits. The IRS isn't looking for villains. It's looking for verifiable facts. You don't have to be perfect. You just have to be honest. When the books don't balance, fix them. When income doesn't match deposits, ask questions. But don't ever create fiction to fill in the blanks. Because in the audit world, paper remembers. Every edit, every export, every timestamp, it all leaves a fingerprint. That case taught me that personality doesn't protect anyone. Proof does. And in this line of work, proof is the only language that never lies. I'm Lauren, a former IRS agent turned bookkeeper, and this is Audit After Hours. In our next episode, when bookkeeping breaks down, we'll step into the messier side of compliance, disorganized records, missing receipts, and the cleanup strategies that can turn chaos back into clarity. Audit After Hours is a Zero Fluff Books production written and hosted by me, Lauren Twitchell, a former IRS agent turned bookkeeper. This mini-series was created to pull back the curtain on what really happens inside small business audits and to remind you that understanding your numbers isn't about fear, it's about freedom. Production support, editing, and post-mix by Zero Fluff Books media team. For free resources, bookkeeping tools, and upcoming podcast updates, visit zerofluffbooks.com or find us on Facebook, Instagram, Pinterest, and YouTube at Zero Fluff Books. Thank you for spending this season with me, for listening, reflecting, and proving that the story behind the numbers always matter. Until next time, keep your books clean, your receipts handy, and your confidence high.